Ok, samo da sačekamo još malo. Počeo je YouTube live prenos i uskoro ćemo krenuti sa zvaničnim delom webinara. Ok, polako će nam se još ljudi pridruživati. Dobar dan svima, ja sam Ivana i u ime Naučno-tehnološkog parka Beograd. Hvala što ste sa nama na još jednom online webinaru Četvrtkom u četiri, seriji edukativnih online događaja kojima nastavimo da se bavimo nekim startup temama koje su važni za razvoj novih startupa i tehnološkog preduzetništva. Danas pričamo o jednoj interesantnoj temi, a to je odnos startupa i investitora. Kao što ste mogli da čujete i u najavi ovog webinara, san svakog startupa jeste da dobije investiciju i nastavi da radi na usavršavanju svog proizvoda, ali šta i kada se taj san ostvari? Da li je stvarno sve fun and game i koliko se pravila igre zapravo menjaju? Hoćete li moći da se posvetite samo proizvodu i kako treba da izgleda odnos koji razvijate sa investitorom? Da damo odgovore na ova pitanja, pomoći će nam naš današnji sagovornik Sava Marinković, serijski preduzetnik koji će iz svog bogatog iskustva govoriti o naučenim lekcijama i izazovima za startupe kada je reč o investicijama. Sava će na početku dati kratku prezentaciju, a potom ćemo nastaviti razgovor i naravno pozivam i vas da se aktivno uključite u diskusiju. Kako je Sava rođen u Americi, gde se i školovao i započeo svoju karijeru, budući da će biti lakše da nam na pravi način prenese svoje impresije, ovaj webinar ćemo dalje voditi na engleskom jeziku. Sava je inače primer nekoga ko se vratio u Srbiji i nastavio ovde da razvija svoj biznis, počevši od Poslovno-tehnološkog inkubatora tehničkih fakulteta. Više o tome Sava će podeliti sa nama u narednih sat vremena. So I'll switch to English right now. Sava, thank you once again for being with us today. It is really a great pleasure to have you with us. I would like to remind all of you who are with us today to take part in the discussion, to ask and post your questions in the Q&A section in the bottom of the screen. Sava, the floor is yours.
Thank you, Ivana. So I can understand the Serbian well, but I want to try to jump into it. So I appreciate being able to do this in English. I think everyone will benefit better from it. But this discussion isn't about teaching you about steps of investment. There's many resources for that. This is really a discussion about the dynamics between startups and investors, and a few questions that you should really ask when you're dealing with investors and dealing with entrepreneurship and everything that's involved around that. So I am going to give a short presentation, and let me go into full screen on this. And okay, so now can you see that here? And I'm going to reduce this down. Mm-hmm. Okay, so Čist, račun, duga, ljubav. I love that phrase because it says a lot, especially in investment, and transfers there very well. So what I'll talk about today is first we're going to do a poll. I'll talk about me. I'll talk about a standard model of investment, the burden of being a founder, and then some questions to think about. And then, like Ivana said, we'll go into a question and answer. So if you have questions, raise your hand. Ivana, just jump in because I don't see the dashboard, and then it's really kind of interactive, and I'll share this. So starting, you're going to get a poll right now. If you can launch that, and I'm doing some customer discovery, as you probably know from doing lean startup methodology. Can we launch the poll? Okay.
Yeah, I would like to ask all participants just to check their, yeah. Yeah. Okay.
I'm asking you to summarize. Okay. So can we show results on this in real time?
Maya, can you share the results? Okay, here they are.
Okay, great. So we got a little bit of a balance. No investors are here, which is good. We can have a very open conversation about that. This is helpful. So I'm going to talk a little bit about my perspective. So I've seen things from a corporate investment perspective, like when I was with General Electric. That's how they fund initiatives internally. And there's a lot of interesting work around zero-based budgets, which if you're a student of that, that's very, very interesting. I've gone through angel investment, venture investment, corporate investment. I've gone through grants. So from a phase one, we're able to win that to here out of Serbia as well, to launch acne quantification. I've had the privilege to advise startups. I've patented a lot, and I've been a board member. So my background on what I've been involved in, and especially here in Serbia, I was able to start a few ventures, learned a lot the hard way, started the venture when it wasn't kind of sexy to be a startup. It was still kind of bare bones, but Serbia's advanced quite a bit. So that's my background a little bit. And what's the goal? So if you're this kind of growth, you start in some seed stage, you have a concept, and then the goal is get some angels, and you're doing more business planning, and then you get to early stage, and then you get these deals, and then you go through these different rounds, and then you're ready for the IPO, and everyone's happy. So this was true quite a bit, and it's changing today because actually the things that why are these easier ways to get money? Because these kinds of investors are willing to take a lot more risk in the early stages. And the later stages, they want to see you with deals, they want to see you with operations, they want to know that you can grow. And because the profile of the investor as it goes over time to mezzanine changes, and that interaction changes quite a bit as well. So, so there's many of these. You can study this. I'm not going to repeat this stuff, but what's important from this one is the investors are not the same anywhere you look. And I want to focus on this slide. And this is what I call the founder burden over the stages of that same stage of investment, going from bootstrap to friends and family and fools and angels to early VC, and then maybe you might have corporate VC and late stage, and then you finally make it big and you have an IPO and private equity and all is good in the world. You ring the bell in NASDAQ or the Belgrade Bellex, whatever it is, and then you're retiring on an island. But when you look at there's three types of risks that come out of when you work with these. And that is, there's moral, I'll first start, there's personal financial risk. That's what's green. In the very beginning, you have a lot of personal financial risk. You may try to do a startup while having your regular job. And then because you're using your own money, you are committing to this typically with your own money. Then you might get to this next stage, which is friends, families, and fools. And you might be able to breathe a little bit easier because now you can use their money to build prototypes and an MVP and do some more customer discovery. Angels that reduce it even more because typically they'll give far more and it gets more formalized. And then as you get to early VC, you could start paying yourself a salary. And then when you get to late stage VC, that means you have a lot more revenues typically, and you can pay yourself even more. And then when you're IPO private equity, they expect you to be compensated to keep you both in cash and stock. So that's how personal financial risk changes over time generally. Now, I'll go on to the legal Čist, račun. And this one grows in a sense of, you kind of have low legal risk as a bootstrap. You're not really committing to customers. You might try to tell a big story, but that's about probably the biggest thing you could do unless you're trying to boast a medical product that's ready to launch. Then you might have problems with regulatory agencies. And then even with friends, family, and fools, they know you. So typically they're not going to sue you in court as you grow. And angels also tend to be, there's a little more legal strictness to you, but they're still a little bit less formal. But once you hit VC, it takes a jump here and it continues to rise far more highly. And I'm going to come back to this piece about the VCs, but what happens is you start getting all these agreements and documents and it really grows up. It really increases the level of legal responsibility and legal impact, and that only goes higher. So when you're at early VC, this is where you have terms where the VC can say, if you don't do this, I get to have more say in the company, or you cannot be doing everything you want to do because I as the investor can tell you this. And that only grows over time, but it makes them the biggest jump probably once you start doing a formal VC round. They're in your equity table. They're probably almost surely on a board seat, and then they grow over time. The third one, which is the most interesting one, is a moral risk and a moral impact. And this one actually generally starts low. You might have your own kind of reputational aspect here as a bootstrapper. But what happens as you go up and over is it takes an interesting jump. At friends, family, and fools, you have a very high jump of moral obligation, moral risk. So I'm gonna pause right here, and I'm going to, before I go on, I'm gonna ask when someone, this is a question, we could look at answers in the chat window, and let me see if I could pull up, you could put it in the, maybe in the Q&A window. Is there a chat window for this? Do we have a chat window even?
Yeah, you have option more, and when you click there, you will find the chat. Chat,
okay. Okay, so in the chat window, let me see, all panelists and attendees, why do you, when someone loans you money, why do you pay back that money? Why do you pay back a debt? So what answers do you think? Go ahead and type it in the chat window.
Okay.
I'm sure everyone's typing this in the YouTube channel. That's why they're not typing it here. I'll give it another few moments. Why do you repay a debt?
Okay, maybe you can continue it, then we can do
it's fairly, because I
yeah.
expect someone to do the same. Okay, great. Any more?
Don't be shy.
Yes, exactly. Don't be shy. I think they're typing it on the YouTube channel.
Okay, let me check.
Principle and trust. Yes. Okay, so the underlying reason, when you ask yourself, why do I repay a debt to the bank? Why do I repay a debt to my neighbor when I borrow something? Do I repay them if I borrow something from a family member? The underlying one, basically, it's a moral, it tends to be a moral obligation. Today, you have legal constructs that says, if you don't repay this bank loan, I have a legal obligation that I can get my money back in the court, or I repossess your apartment or something else. It's a moral obligation. And there's a great book. It's called Debt. Great. The First 5,000 Years by David Graeber. I highly recommend it. It's highly relevant to today. But coming back, coming back to, oops. So I'll close this out. And when you get friends, family, and fools, you end up having a much higher moral obligation than a legal obligation to pay that back. And when you have angels and VCs and corporate VCs and later on, it becomes much more transactional, and that's where the legal comes up. Why is that interesting? Because everyone says, okay, ask your friends, family, and fools round, do this stuff, and then then you can ask them, well, if they know that you have that money in VCs, if they know they have it, they know you are going to work much harder to make this succeed because of that moral element. It's a really subtle point. Everyone kind of learns that you go through friends, family, and fools. You could do crowdsourcing too, but even today's crowdsourcing, you need some capital to do the design or branding. Unless you have all of that in-house, there's going to be some element of expenditure to try to get that off the ground. And even then, you're going to ask your friends and family to kickstart or go to an Indiegogo or something in the beginning. So you have this peak, which is super interesting here, and a little bit kind of tricky because investors love to see it, but it puts you in a bind where it makes you less, it puts a moral variable in what you're doing versus a distinct kind of rational, emotional aspect. And so when you look at this, and so then as you go forward again, when you get to kind of corporate VCs and late stage VCs, and that moral element exists, but it's far more over, there's less of that than you borrowing from your friends. It becomes much more business-like and transactional. And this is as a generalized view. So this is something that when people jump in, they're like, okay, you really believe your idea is going to succeed, otherwise you wouldn't start on it. But there's some moral hazard in here, because everyone on the right side of this investment stage, if they know you have friends, family, and fools in, they kind of have a little bit of an extra card to play, or that they know that they have a little bit of extra leverage. It could help you get more investment, but it could also make it to the VC's advantage if they know that you're actually in it because you don't want to lose all your friends and family's money that they put in. So when we come through, I'll just go through a couple of questions. So first, let me just pause here. Does anyone have any questions? And maybe in the chat window, or you can raise your hand. I'm going to take a short little pause here before I go to the next screen.
Mm-hmm. So if anyone has a question, please just write that in the Q&A section and Sava will answer.
Or you could even talk. I think we can raise your hand.
Yeah, you can raise, or you can raise your hand.
Yeah, if you prefer to speak. And you could ask in Serbian or English. I'll understand either one.
Mm-hmm. So any questions?
From YouTube, what do you think about the pre-seed model? Is that right? I jumped over you, Ivana.
Yeah. We had one question from YouTube live chat. What do you think about pre-seed model?
What specifically about this pre-seed model? There's a lot in there. So can you expand? While they're typing that in, why is this interesting now? Because there's an effort to put a lot of grant work. There's a lot more grant work activity. There's here in Serbia, you have the Science Fund and the Innovation Fund. It helps you bridge this capital before you're ready, and those help you in some ways bridge the friends, family, and fools around, and especially if you're an institution, if you're a researcher, you can use the institution's money for that. But in terms of the pre-seed model, I'm just trying to get a little more detail from that person in the live chat. Did they add anything in there?
Okay, well, this was a question from YouTube live chat, but please share just a little more specific information with us. What are you interested in? Well, maybe you can continue while we wait.
I'll continue, sure. Okay, so that's this part. So now let's go to the general questions at which I'm going to come down and cover into here. So here's 6 questions that you should ask yourself as you're going through this dynamic between investors and funding. And so when you think of the investor, you're asking yourself, what's their incentives from this? And the incentive typically, and if it's friends, families, and fools, they would like to make some money, and there's different risk models. When you get into a venture capitalist, you have to remember that they are a portfolio. They have a portfolio of companies. And it's an important differentiation because your venture failing doesn't affect them as much as if it's as a higher stakes investor. They expect that a certain amount of them will fail. And that leads into the second question, which is, can you live with the worst case scenario? So the second question is really about getting into agreements with investors. When you get into these agreements, they aren't written because everything's going to be nice. They're written that when things go bad, who gets to say what? And it's really important that when you look at investor documents, it's the same thing in any kind of investment piece, that you're really looking at these documents as if if your venture fails, what happens? And that's a continuous question you always ask yourself. And you have to be aware of what is the worst case scenario, and the forethought will help you pain, like getting pain that when things start going south, and then you have to dig up and say what happened. And I'll give you an anecdote about these. So I'm going to go on these, but I saw the question get his experience with raising money pre-seed angel. What do you think about pre-seed angel or money? So let me go back to that one. And so when we look at seed, we're typically looking somewhere around the angels, and there might be seed capital funds. So in terms of the experience, I've done kind of crowdfunding. Everything depends on the product. So I'll put a very simple framework on the pre-seed part. It's getting much harder to do crowdfunding than it was when it first started. If you look at all of the crowdfundings, they all have the same storyline, more or less. We've gotten this far and we're almost done, but we need your help. And here's how you can help, and here's what we'll give you. And when we finish this and we've reduced our risks, it's a pretty common storyline now. And each one of those can go into their own kind of track. But when you have an idea coming out, the most important part today on any of these raising monies is the customer discovery. And that's part of this lean methodology. And it is absolutely critical. I would not, my next venture, I would not start until I really did a thorough customer discovery and I built a lean, at least the beginnings of a lean canvas and a value proposition. Why is that? Because the customer discovery really lets you avoid a lot of irrational mistakes about ideas, but it also builds your initial investment in your initial customer network. If you about an idea early on, then you can go back to them later. So the customer discovery is really your network building to make your startup successful. And any one of those network points can trigger into some type of funding or support. So that's number one. I would always do customer discovery. The second point would be is to take try to get customers to prepay. Try to get a deal before you even have a product, that you can get to the point where you can describe the value proposition where they say, if I did this, I would buy it. And then you know that you're really onto an idea that could have traction on it. But I'm going to give an example of what Philips does. So Philips, as a corporate, they tried to, they really put an entrepreneurial effort starting a few years ago. They will build an idea out, and they'll build a website as if the product existed. And they want to see how many people kind of organically go to the site, organically click through, and they build a funnel out to see how far will a person go, like how many will add the product into the basket, how many will give the credit card information and buy, even with no product at all. And when they get to the point where they say submit, they'll get an error message that says, sorry, product is not available right now, we'll notify you. Like they'll lead a person all the way as if they're really buying a real product to the end. And then let's say like, not available, or, it's not in stock. It's going to be in stock in a year from now, something like that. Then they really know they've validated a number of customer needs. That's one area of going really far on the customer discovery path on a corporate level. And that's something that as a venture you can do. There's a lot of very cheap ways now and free ways to build websites, to build app mock-ups, everything. And you can create realistic testing about your product. So the first one is customer discovery. The second one is getting customers to prepay. This is very common with B2B or letters of intent. And this is all without, you don't need funding. I've gone through this methodology already, and you'll be surprised how successful you can be. The third part that I would do in terms of the pre-seed and like kind of angel funding today is you have to kind of look at the grant routes. That requires an investment of time. But there's a lot, especially in Serbia right now, you have a lot of options here for growing investment. Innovation fund's great. Science fund is great. A science fund includes humanities as well, so it could be all sorts of things that come in there. And there's a lot of eager ones. I'll note one thing on accelerators. Accelerators get you visibility, and they help you kind of grow traction. So it just depends on what stage you are as an entrepreneur. But my experience with raising money, I've raised about 14 million, over 14 million in equity, and another 2 million in grants. So that's my reference point. Okay, keep the questions coming. So we'll come back. I'll give you questions to think about. So again, question 3 is about, do you deserve something? Because this is an ego play. And you have to be very careful that when you put all this effort in, you have to be very balanced about it. Like, this is typically a problem with early entrepreneurs, effort in that it needs to succeed. Or sometimes with researchers who build a technology but have not really, they've got the catalyst of the technology, but they've not extended it through to the customer discovery and linking it with the market side. And that's something that I've come across some great researchers. I've come across some researchers who are great, but they also, they think the technology is the market. And as we know, that's not the case. Čist račun, well, you have a čist račun with friends and family. So be very careful whenever you ask money from friends and family. There's a huge moral weight, as I mentioned to you, and you can't underestimate it. It makes you really aligned to finish something, but you don't want to have that extra risk on there if you don't have to. Let them come in. I had a personal example of a friend who wanted to put in part of his retirement savings into a venture. And I said no, because I did not want that burden on me. So it's very important. Okay, so now I'll ask a question. Now you could type it in the chat. When can you overpromise? When do you think you can overpromise? In terms of your startup idea?
Okay, let's hear the participants. Don't be shy. Once again, please write your answer, share your thoughts with us.
Give it a minute.
Yeah, they're probably typing.
So when can you overpromise an idea?
Barbara says, when you have stable income for some period of time. And Miograd said, when you build their trust.
Okay, any more? I'll give it one more chance. Anyone else want to give an answer or a thought? Any more? Okay, so when can you overpromise? Okay, this is personal preference, because whatever you overpromise, you're creating some potential moral obligation or trust obligation. And so my experience is almost never overpromise. It becomes easy to be eager to raise money, especially when you don't have an income and you decide you're overpromising. Actually, I would say to Barbara's point that it's actually more common to overpromise when you don't have a stable income because you're trying to get that income. But the investors, it's kind of like dating. You can kind of fake it, like who you are, to impress someone, but at some point that's going to come out. And there's a theory of thought that says don't overpromise, like don't try to fake what you're doing. Be very straight up. The case of overpromising is, when I see it's okay, is when you're talking about vision. You have to, and thinking big. You have to think about what can this lead to in the opportunities, and you leave that open. And that, to me, that is the one case when you could really overpromise. But when it comes to what you're doing in your journey, in your entrepreneurial journey, you don't. Generally, my experience has shown you don't want to do it because you don't want to have to play catch up to that promise when you find out that promise is much harder to fulfill. Okay, and now I'm going to go to the last question, which is, where does the moral transition to legal? Any thoughts on this in the chat window? When does the moral transition to legal? When does moral responsibility become less important or switches directly to legal responsibility?
Okay, we have a new question from Sava. So feel free to write your answer.
Do you see me, Ivana, or did you just see the screen?
Yeah, I see you.
Okay, I don't see myself, so I don't know if I'm even centered on the screen.
No, don't worry, we can see you.
Okay, so no responses there. I'll say that any Sebs, one response. Let's see. Okay, when you move from 3 friends, yeah, 3 Fs to angels. Yeah, it's an interesting transition point and it has to be something that's very kind of clear to them. I think it rarely transitions unless there's some kind of exiting mechanism. That's my personal opinion. So, or you've given something in return for the ride that they put, for the risk that they put in. It could have been the ride or the excitement of being part of it, and where they don't have to, where their risk tolerance is much less. So it depends on what the person's risk tolerance is when you bring them in. So if they don't have a lot of cash, but they believe in you, you obviously have a much higher moral responsibility. And that becomes a burden later. So if you have friends who want to invest, make sure they're coming from hedge funds and have a lot of extra cash that they just want to write to you. Plenty of them, right? Okay. So that's my, those are my talking points. This is you can follow me at NanoSava. It's real people only. But we can now go back to, questions. Yes.
Okay, thank you, Sava, for your presentation. It was very useful. So feel free to ask anything you want to know about relation between startup and investor. While we are waiting for your questions, Sava, I would like to ask you something. I read recently that no good relation ever starts out by asking someone for money. And how do you see this reflects to this startup investor relation? How would you define or describe a healthy relation between startup and investor?
It's everything about interests. So if you're using a personal relationship to ask for money, obviously you have that more. Are you leveraging your personal relationship to ask for it? You always have a higher moral responsibility to that investor because you don't want to break that relationship that existed before. If you have, so I'll come in a little bit about culture, which is, I would love to hear people's thoughts on this, which is, so if you're familiar with Hofstede, did an analysis of cultures globally. He rated cultures on I think a dozen different factors. Is it a high trust or low trust society? Is it a transactional or relationship-based society? Is it long-term or short-term minded? And what he found, and is it like an individualistic society or a collective society? So countries like the US, Scandinavia are high trust, individualistic. Countries like France are individual, low trust, meaning individual says like I'm responsible for myself, and collective means there's like an in-group and an out-group. China is considered a collective low trust, and Japan is an outlier in that it's a collective high trust. So Serbia is considered collective low trust generally. So there's like an in-group and out-group. Are you like Serb, not Serb? And there's like more like literature and research that talks about whether it's a German or a French kind of linguistic relational model. But but when you come into, why is Serbia kind of in an interesting position? Because very commonly, it's been very transactional in many ways when you don't have a close personal relation with the other person. So I'll do a good deal with you now. It doesn't mean I'll do a good deal with you later. Or I may do a deal with your, like a competitor or something like that. It's a very peculiar kind of dynamic, especially in the current set of like tycoons. But that's changing and it's forming. And I think it's an interesting time to now in the next few years how that'll evolve, and I think it evolve very positively. But I don't think you can ask for money. You can be very open about it and to say, look, I'm doing this risky thing. Is this interesting to you or not? And here's what I see right now from the customer for the opportunity, and I believe in this. And I don't think it affects the relationship if you're legitimately straightforward about the fundraise. It really depends on the approach and where you are.
Okay, we have one question from YouTube. Can you tell your personal story with VC Ventures investor, and what are your current plans?
Sure. So most recent VC investment that I've been a part of has been a corporate VC. And the interesting part about corporate venture capitalists is that you can have a very nice investment from them. And typically with corporate VCs, it doesn't have to be just smart money, but a lot of the corporate VC deals want to have a strategic deal with the corporate parent company. So if the corporate parent, if the general corporation would want to sign a revenue deal with you, that's a good sign for the VC that to invest in you as well. So let's say I make cups, and I have the venture capital arm of a ceramics manufacturer, and they already want to supply me, like they want to buy these cups already or buy the marketing rights to it in addition to the equity investment. That's a great sign. And there's a lot of positives to it. The major negative to it is that the decision-making of the VC arm is also subject to corporate politics. It's a risk that could happen. And if the corporate priorities change, then you may be left out as a startup. So corporate VCs have two drivers. They want a financial return and they want a strategic return. If the strategic return changes, and it's a question when you're going through that dynamic, you have to really weigh, again, it comes to the agreements that you make. So what happens if you fall out of strategic alignment? Are you going to be left as a zombie startup? And will that VC not, like, especially if it's a corporate VC as a lead, which they sometimes are, it becomes risky in there. So what are my current plans? There's opportunities everywhere. So those are like the next ideas that are ahead for me right now is looking at kind of streamlined opportunities to launch kind of products. And once you get through the launch process a few times, you can quickly bypass all the downsides of all the pitfalls of previous investments. So you don't have to spend as much time fundraising because you know where to prioritize your time.
Okay. Sava, tell us, what are the most common mistakes that startups make once they raise funding?
So what I've seen in terms of the funding is you have to be really honest and diligent into, so this is after you've raised the funding or while you're raising. So once you got the cash, the biggest number one mistake I think is you have to figure out how to get to, your plan, there's impatient for there's a saying, you want to be impatient for profit and patient for growth. So it's really more important to be focused on cash flow in the beginning and really figuring out, am I selling enough? Is this going to be a profitable model? Than trying to defer it. Raising a follow-on round is not so simple. It's not a given. It could be simple, but it's not a given. And so when you get the investment, you have to be very clever about the cash flows, because in today's world right now, what's happening, especially with uncertainty. So when we look at today's kind of COVID impact globally, so because there's a lot of uncertainty, some industries are going to be okay. So if you're 3M, if you're in some of these corporate areas, you're going to be okay. If you happen to be in like teleconferencing and other areas, immediate needs, you're probably going to be okay. It depends in certain areas. Grocery stores have been pretty stable, or the food industry, depending on the segment. But what's happening now is with the uncertainty, you have a whole group of private cash that's sitting there that says, do I need to reallocate my portfolio? And when that comes into play, you have people who are like trying to say, is it better for me to stay in stocks, or do I want to put into a startup venture and diversify in a sense, or see a much clearer business plan to how to raise capital? So in one sense, it's a really good time to be in a startup if you have an idea, because you become an alternate means of investment. But on the other side is you the VCs, especially late VCs, may hold their money longer because they might want to make sure they fund their current companies instead of going into new companies. So what's happening now is there's a flood of activity to people applying for grants, anything related to COVID-19 grants. They're twisting everything to be like, well, this is going to be good for coronavirus, post whatever. So there's a huge activity in grant writing now, because they're not getting the connections. But the high net worth investors are a very, the high net worth investors are the interesting ones because they're sitting on cash in some allocation of investments, and they might be very good for early stage investments right now.
Okay, we have some questions in the chat section. Daniel asks, to what do you attribute your success? Trust your instincts or what?
Okay, so what to what do I attribute success? I think the instincts come after you've honed in your instincts on some kind of stone. That stone is going to be a corporate education, some kind of other learning area where you hone instincts. Instincts don't just materialize, in my opinion. They're refined on some kind of block where you're able to test and move those, and have some kind of proxy experience to that. I look at, from my perspective, you have to be very, I trust a major part of my success to saying like, you have to be happy with what you're doing at the moment. In every situation. So when I was at GE Healthcare, General Electric, I was making the most out of it because I was learning out of it. There are entrepreneurs who said, I can never do something in the corporate world. And you have to dig a little deeper and say, well, why not? Is it because you don't want a boss? Is it like a parenting issue from childhood? Is it something like, what's causing you to have problems with authority? Is it communication? Is it something else where people don't like the corporate world, or they don't have an appetite for risk in a startup world and they like to stay in the corporate world? You just have to be really honest with yourself, and you have to take each experience that you're doing in the moment and learn from it. And that helps you be very kind of aware, like that builds better instincts, let's say, in context. Then fundamentally, tools-wise, being very good at being to model numbers financially. That's a really important one. You have to be able to convert whatever it is, or to know how to read spreadsheets, because you have a qualitative portion of your business and a quantitative portion of your business. You could talk the story, and then you have to bounce it against rationality with the numbers, and it's really that's an important part of this. And then the third one is you have to be close. You have to be a good listener. And you have to know where your limits are between your own opinion and how to listen to others. So that's for Danielle.
Yeah.
Okay.
We also have Miodrag question. He asks for some literature because he wants to know more about this topic. He's not familiar with the terms we use here today. So what do you suggest? What kind of literature? Some particular books?
I'm looking at my bookshelf right now. Yeah, so Steve Blank, Startup Owner's Manual, and read The Lean Startup. Those two books. And then the Startup Owner's Manual is like the how-to do everything. I in one of a potential little experiment that we did, I had a team that I said, follow this book exactly. And they did very well just by following the steps. So if you're just starting out, don't trust your instincts. Go try the book first. Have that as a basis. Do it once through the whole methodology, and you're going to learn a ton for it, which is going to inform you later. And then you can kind of add more adjustments to that.
Okay. Well, investors could complicate investment process quite a bit sometimes. Sava, I know you have some interesting experience in this. So what have been, can you just share with us a little more about that? And what have been your lessons learned from overcoming these challenges?
Every investor is unique. You have to be read up on what different stage investors want out of giving you money. And that's the best advice I can provide, because when you go to an investor and you start with an angel, and when you go to an angel, you're getting money to accomplish some milestone. And that milestone has to enable you to raise the next round effectively. So if you're raising seed capital, you want to talk to the Series A investors to know what criteria will they want to put money into your current stage. So I'm looking for seed investment. I need 50,000, 100, 200,000. I want to know from the Series A investors later what will get them to invest in an investment. And that becomes my plan for the seed. Or if I'm raising Series A and I want to talk to Series A investors, I talk to Series B investors and I say, what's important for you today to put money into a successful Series A venture? And you have to have that context. A big problem I see in terms of mismatches is putting cash in and not knowing what's going to create that uptick in value after you're done with that investment. You're getting investment to move the value of your business and your idea much farther along. So even if you're a researcher and you do a proof of concept, once you get the proof of concept, that lowers risk and it creates more value. You've de-risked your product idea. And when you do that, that helps have good conversations with investors going forward. And that's what I think is it's a very important way to look at it. No one writes checks like this anymore. So it's really, you want to, there's a very systematic view of it. When we look back at the stages, the late stage investors, they always look at the ones ahead to see how to put money in, and they have their own set of criteria.
Mm-hmm. Okay. To what extent the good startup investor relation is crucial for future funding? I mean, in terms of approaching and raise new investments for startup.
You have to understand what's important to those investors. So what are their criteria, number one? And you have to have that discussion, like what is success for you? And that's a joint discussion about with this amount of money, I want to achieve X. And you want them, number one, you want to keep them communicate. You want to over communicate to your investors as much as possible. It's a time burden, but it's really important because then the worst thing investors like, meaning what investors hate the most, are surprises. And you have to communicate so that they have very little surprises that come out of this. And then you have them on board. And that goes at all levels of investment, but it's really important. And it's especially true with like stock markets. No one likes surprise earnings announcements, but you want to over communicate so that they don't get surprised.
Okay, you mentioned the COVID-19 in one moment, and regarding all this Corona crisis, can you just share with us how do you see the investors will act in the next period? And what do you think that startups can do over the, let's say, 6 months that will set them in a really good stead for the future?
The fact that a lot of the world is still at lockdown is an advantage for entrepreneurs to reach out to people. I've probably talked to about 40 customers in the last 2 months in a way that I would not have been able to before. And everyone's on Zoom or remote. Everyone's been, even if they're back in the offices, everyone's much more comfortable with remote dialogues, and it's become okay to be like in this environment. I'm talking to you from home or wherever it is, and that has become far more acceptable. So some of the norms have dropped and makes it actually easier for you to reach customers, because you're going to be able to find that they're I was talking to some doctors. They were super easy to get to, like very senior clinicians and medical center directors. You can reach out to them. So in this moment now, you should be doing a lot of continued customer discovery or business development, and that's one of the best ways to go through this. And there's a whole technique behind it, but that's the number one thing that this is enabling you to do. And there'll be a window where people are still at home. There's still lockdowns in many places in the world, and even with so it's a good time, and it's much easier to outreach them because they're going to be much more likely to be back on their computers at home. They don't have the commute time. They have a little bit more time in the day, and I would take advantage of it.
You mentioned that investors don't like surprises. And I would like to ask you, what is the most unusual or unexpected question you received from investor, or what is the most unusual thing you've been asked to do?
I don't know. Nothing phases me anymore. So there's not most unusual thing. I mean, I'm different. Nothing that was out of the ordinary, but in terms of when you do get when you get like some very institutional capital, like venture capital, you might be surprised at how deeply the due diligence goes, like asking for what free open software licenses you're using versus proprietary software. So that these are things that kind of catch you off guard, that they actually think about it. I mean, it makes sure that you're doing everything correctly, and but especially with investors that you want to, they have their own reputational risk. But what's the most unusual thing? Maybe going to some meetings to show off to others. I don't know. I'll pass on that one. If I remember, I'll throw it in the chat.
Okay. Okay, I would just like to remind all of you once again, if you have some questions, please feel free to ask. I have one more question for Sava. And in your opinion, just tell me, is there an ideal time for a startup to start fundraising, and what it would be?
This may sound counterintuitive, but don't get excited about fundraising. Get excited about customer discovery and finding out a lot of the problem. And then through the customer discovery, find out ways of how to make money, and then share that journey with investors or share that journey with others. Because if you're excited about the customer discovery sets the culture of the founders and the company, and how you're going about, like what your perception is of customers, how you're acting. All the culture starts at that point. And so I would really, like, if you want to start fundraising, keep customer discovery, and then expand into investors in the area. But don't ask for the money. Just keep talking to investors, because you don't try to rush to raise capital is what I'm trying to say. It's counterintuitive, but you're going to get to it faster because you're going to know the ins and outs better. And by knowing the customers better, you make a stronger argument for your venture than you make a stronger argument for your venture that's going to actually make it easier for you to raise money, especially with certain types of investors. Don't worry about corporate books and all the legal structure. Make sure you found a need that people like. And then if you find an interested investor, you could do all the formal stuff later. Focus on just the ideas and getting this in, getting the ideas and getting the customer discovery down. I can't emphasize it enough. And that should be fun to you. If it's not fun, maybe you're just doing it for the money, and then it's really not worth the risk.
Okay. Thank you. Good advice for the end for this webinar. If we do not have more questions, I will use the opportunity to thank you, Sava, once again for your time and for being with us today. I would also like to thank you all of you for being the part of this webinar. The whole video about this conversation will be available on our YouTube channel. And we also do some follow-up emails. So feel free to send the video to all your friends or colleagues that you think will be interested in this kind of content. Sava, thank you once again for joining us. And I wish all of you the best, and see you soon on Zoom. Join us again. Thank you, everyone.
Thanks, Ray.
Bye.
All right, bye.